Good morning, ladies and gentlemen. This is Market Forecast brought to you by Options University. And this is Butch Shorak. It's Monday, December 9th, 2013. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. Looking at the previous week, what kind of results did we get? Well, you really only needed to look at one day, as Friday was the day of the week. Looking at our indexes, the Dow, the NASDAQ, the S&P 500, we see mixed numbers as we saw them all very close to 0%. Looking at the Dow, we saw we were down 0.4%, NASDAQ up 0.1%, leading all of the indexes for the week. And then we see the S&P 500 at flat for the week, again thanks to Friday, and the Russell 2000 down 1%, as we see year-to-date numbers of 22.3% all the way up to 34.5% out of the NASDAQ, 26% out of the S&P 500, and Russell 2000 barely trailing the race that it's having with the NASDAQ to see which is going to have the biggest moves for the year at 33.2%. All right, let's take a look and see exactly what economic announcements we're going to look at for the coming week. Basically, what we saw during the last week is we saw everything take place on Friday. We'll look at the chart in a few minutes, but we saw that what happened is it came down, hit support. And so the big news of the week, of course, was the Friday employment numbers, and they basically let the market decide, which really had no great desire to move down anyway. It let the market decide that we're not going to see any big moves in the next month or even 2 months out of the Fed as far as the tapering that is expected to take place. With that thought in mind, let's take a look and see what we're looking at in the coming week. As we look at Monday, and there is basically nothing there. We look at Tuesday and look for nothing there that's really going to be any big numbers or announcements to move the market. Looking at Wednesday, again, a day of basically zero. And then on Thursday, it kicks in high gear. Looking at Thursday, jobless claims, which we see every single week, retail sales, which we see taking place, import and export prices taking place at 8:30. So these are things that are going to give us an indication of what the economy is doing, both from the labor side of the market and from retail sales during this holiday season. Season that generally provides a euphoria for the market as the buying and the good cheer tends to follow through. So we could expect that the market could continue up in this upward fashion after hitting this level of support, which it did during the week. Business inventory is coming out Thursday morning at 10 o'clock, and PPI coming out at 8:30 on Friday, December 13th. Again, another thing that certainly is capable of moving the market, as it's one of those important things telling us exactly what's going to take place with that market. Now let's take a look at the chart of the S&P and see what that will look like, that move on Friday. Looking at the week, we see that looking at the longer term, we are definitely in an uptrend. The 30-day moving average is above the 50-day moving average, which is above the 200-day moving average, and continues on that, which it has for the last year. As the Obama era has shown us an area of growth, as the economy has turned around and keeps growing, slowly albeit, but nonetheless heading up in the appropriate direction, making rebounds where the market is reaching new highs at all time. What's the next logical step? Well, of course, our logical step is going to head for that previous high, which was at 1813 in the S&P. Let's take a look at the week and see exactly how that took place with a little more detail. And we saw, here's Monday, we saw that the market got a lower high and a lower low, actually changing its short-term direction. And we see that it began to pull back, and it went down, hit that 30-day moving average on Wednesday, gave us an inside day on Thursday as they waited for that all-important employment numbers, and then the employment numbers came out Friday in levels of around 7%, and boy, there we are, looking at that S&P, up 20 points for the day, up 1.12%. That's the kind of move you like to see if you're a bull, as we see us heading for that logical previous all-time high. That is our next step. All right, looking at that, let's now take a look at the Dow and see if it followed in that same sequence. And looking at the Dow, we see that we're headed for that previous high, which is an all-time high for the Dow. Came down, hit that support again at that 30-day moving average and bounced up. Market showing no great desire to move down and head down lower. Looking at the NASDAQ, wow, look at this. As we see, we already are sitting at resistance here, ready to pop into new high areas for this current bull market. NASDAQ leading the way up by about 34% for the year, showing us the strength that's taking place as we can expect that to continue well into mid-January. Looking at the Russell 2000, which now is lagging a little bit. Let's see what it looks like on the chart, and there we are. Not anywhere near as high to its previous high as the NASDAQ was, but don't worry, the Russell's been known to follow up and continue. Is this rally getting a little tired? Well, there's a little tiredness in this rally, but you know what? There is no big desire for this thing to sell off. It only pulled back to the 30-day moving average. Not much of a big move as we continue in this bull run. Let's take a look at some of the other sectors that are available for us in the market and see exactly what they showed us. First, checking out the VIX, our contrarian indicator, which gives us how much fear there is in the market. As the market pulled back, we would expect a bit of a peak taking place. Even as the market was hitting new highs, we were seeing a little bit of a rise in the VIX. So we almost had a forecaster there that this was going to take place. Now that the market has taken off on Friday, look what happened to that VIX, down an appreciable amount of 8.55%, which the percentage isn't important, but the idea is that the fear goes out of the market as they have a greater indicator of what is the Fed going to do. Will there be a knee-jerk reaction when the Fed begins its move to trim? You bet there will be. As it tapers back, there will be a reaction of some kind. Not expected until sometime in 2014, maybe even the second quarter. Now let's take a look at the bond market and see exactly what they did. As it showed us a very little move out of this whole thing, and the bond market basically continues on this flat pattern as it had its big move and now is having trouble making any moves in any direction, just kind of floundering like a fish out of water. Let's take a look next at that movement in gold. Where do the people go for a safe haven when there's trouble? Well, they head for gold, and what's that? It also has been in a bit of a bearish trend as we see the 30 below the 50, which is below the 200, the exact opposite of what we talked about earlier with the different indexes. All right, no big movement to gold, no great fear in the market. Let's take what kind of volume took place last week as we look at this move on Friday, and look at that. A strong volume through the entire week as we had our sell-off, and strong volume as we continued back on up. Next logical move to break through that previous high. All right, with that thought in mind, let's take a look at the financials. XLF, our ETF that gives us an indication of what the financials are doing. A great way for you to trade if you don't want to buy any particular bank or financial market. You can actually go in and buy a diversified fund, and that's what the ETFs give you. A nice, safe way to diversify yourself. If you'd like some help with this, of course, Option University can give you some ideas on how to trade these very, very attractive ETFs. Now, let's take a look at gold oil and see what that did. Well, oil, kind of bottomed out, gave us a new low, and then, boy, look at that, headed right back up. We may not see that $3 a gallon at the pump as we were expecting, but it got close. At the lowest we saw, I believe, was around 318. So with that, let's look at the next ETF, and we'll look at some of those things. When we look at the gold section of market forecasts, we'll look at stocks to watch, see what kind of effect they had. Which ones of those stocks were we watching? We certainly talk about this each and every week as we expected a pullback. We got a pullback. We saw some weakness. Now let's see which stocks responded as we got that weakness and that bounce off support. We'll take a look at the gold members. For those of you that are not gold members and would like more free videos from Options University, go to www.optionsuniversity.com/free gold. And with that thought, this is on the week of December 8th coming up. Market Forecast brought to you by Options University. This is Butch Shorak. It's Monday, December 9th, 2013, and thank you for being here.